All right. Good afternoon, everyone. This session will be in English. And for for the first comers, there are gifts. You have free complimentary copies of this book on data transfers in Latin America that we have co-authored with Ana Nelson, who is there, Jonathan Mendoza, who might be somewhere here, and Pablo Palazzi. So let's start this session that is dedicated to international data transfers and the value of data in the data economy. First, let me present our distinguished set of panelists that will be with us today to discuss these issues. Starting from my right, we have first our colleague, Professor Gustavo Fossacci, who is professor here at FGV Law School, and he's also a judge in the Administrative Council for Tax Appeals, if I translate it correctly. Then we have Beatriz Costa, who is our researcher at CTS and also a partner at Mastro Cristiano Advogados, who is the organizer of this session. Then we have Ana Bayan, who is UN Special Rapporteur for Privacy and also professor at Universidad de Montevideo. Then we have here Cecilia Recap, who is professor at UCL, University College London, and also researcher in the Argentinian Research Council. And last, but of course not least, Carolina von der Weid, who is a diplomat and leads the division on trade and e-commerce at the Itamaraty, the Brazilian Ministry of Foreign Affairs. Now let me start this conversation, this session, with a little bit of insights on why we've decided to organize this session, and I would like to salute also the essential support of Marcelo Cristiano Advogados in the organization of this. There are two fundamental regulatory questions that we want to explore today. One is the complexity in data transfers that we have nowadays, and data transfers that are essential not only for our economy, but also for research and development, for pretty much every social interaction that we have online. They rely upon data transfers. And these are not necessarily seen by the consumer at the end, or the researcher at the end, or the entrepreneur at the end, but they are indeed essential. Now, these free flows of data are increasingly regulated by national norms that are increasingly overlapping and not harmonized. So that is the first point that we want to discuss today. And also, if you have received the complimentary copies of our book on data transfers in Latin America, where we discuss this complexity and we try to put forward some solutions together with Ana Nelson and Pablo and Jonathan, that where we analyze some of the core Latin American framework and how to make them legally interoperable. Now, this concept of legal interoperability is also something that we have advocated a lot in our research within the BRICS, and it has been really interesting to see that this concept has been integrated at the highest level of the BRICS declarations in the last one in Kazan, with the idea of BRICS creating a global framework for personal data that makes policy frameworks interoperable. And very interesting as well, the very recent understanding on data governance in the digital economy, in the data economy, where also these ideas are integrated and even developed further with the second key question that we want to explore today: the value of data and how to properly, fairly tax this value, which is something that the BRICS leaders start to put forward, if you want, as an idea when they speak about the need to redistribute the benefits of data fairly, also within global majority countries. And that is really something that we want to explore also, understanding that there are some very extractive business model going on that hoover up data from the global majority and process them, creating a lot of value in very few jurisdictions, sometimes even then localizing intellectual property in tax havens, were making even more difficult to redistribute the value that is generated from this process. Now, there is a lot of material here for a very good conversation. So I'm very happy that we have such a high-level set of panelists today. I would like maybe to start with Anna, giving us a little bit of overview of the complexity that also in her work as a UN Special Rapporteur, she has to face daily in terms of global data flows. So please, Anna, the floor is yours.
Good morning. Hello, everybody. It is a pleasure and an honor to be here with you today. Today's panel asks an essential question. It is, how can we govern the personal data economy in a way that respects both the economic and regulatory realities of our time and the inherent dignity of every person? Personal data is often referred to as the oil of the digital economy, a resource to be mined, monetized, and taxed. But this metaphor, while useful for economic analysis, fails to capture the deeper truth that data is not simply an asset. It is also an extension of who we are, our identities, our behaviors, our vulnerabilities, and our choices. This raises critical questions, such as, can economic structures that treat data as a commodity truly coexist with human rights frameworks that recognize it as intimately linked to dignity, autonomy, and democracy? Can we develop policies that protect privacy while enabling innovation, taxation, and cross-border data flows? And above all, how do we ensure that the human person remains at the center of this debate? At this point, I must say, personal data is not oil. It is not a mineral resource extracted from the earth. It is extracted from people, from our lives, our interactions, our thoughts, and our bodies. And this distinction matters. When we treat data merely as property, we risk severing it from the individual it represents. We depersonalize that what is inherently personal. From a human rights perspective, this commodification is deeply problematic. It undermines the foundational principle that privacy is not just an economic concern. It is a cornerstone of human dignity, autonomy, and freedom. The right to privacy is enshrined in international human rights law, and personal data is the vehicle through which this right is increasingly exercised or violated in the digital age. When companies treat data as an asset, they often focus on maximizing value through accumulation, profiling, and monetization. But when we recognize data as an extension of the self, the focus must shift to minimizing harm, ensuring consent, and preserving the individual's ability to shape their own digital identity. This tension is not merely theoretical. It has direct implications for how we design legal and fiscal frameworks around data. For example, Can we justify taxing personal data flows if we have not first ensured that the individuals concerned have meaningful control, transparency, and access? Can we reconcile the profit motives of data-driven economies with the rights of vulnerable populations whose data is often extracted without real choice or understanding? A right-based approach does not mean rejecting economic regulation, but it does mean that such regulations must be subordinated to ethical principles. Consent must be freely given. Processing must be proportional and necessary. And individuals must be empowered, not reduced to mere data points. To understand the challenges of governing personal data in Latin America, we must begin by acknowledging the profound asymmetries that shape the global data ecosystem: legal, technological, economical, geopolitical. Personal data does not flow evenly across borders. It is often extracted from countries in the global south and processed, stored, and monetized in the global north. This is not always the result of international data transfers in the legal sense, but rather through international data collection, where the data never formally leaves its country of origin, yet is accessed, analyzed, and exploited remotely by actors that are operating under entirely different legal regimes. This asymmetry is exacerbated by the regulatory imbalance between jurisdictions. The European Union, through the GDPR, has developed a sophisticated and enforceable framework for data protection, including mechanisms for international adequacy decisions and contractual safeguards. Meanwhile, in Latin America, although many countries have adopted laws inspired by the European model, the region continues to suffer from legal fragmentation, uneven enforcement, and limited institutional capacity. A recent book I had the honor to co-author, Transferencia Internacional de Datos Personales en América Latina hacia la armonización de normas. I have it here to show it. Here it is. This book emphasized this fragmentation, which limits our ability to act collectively, increases compliance costs, reduces trust, and leaves individuals exposed to inconsistent levels of protection. Even when data protection laws exist on paper, asymmetries in implementation and enforcement mean that rights are not always realized in practice. But these asymmetries are not only legal, they are also technological. The infrastructures that support the global digital economy, cloud computing, artificial intelligence, social media platforms, are predominantly controlled by a handful of transnational corporations that are based outside the region. This results in a concentration of data, capital, and decision-making power that undermines local autonomy and democratic accountability. And then there is a fiscal dimension. As my fellow panelists will point, I'm sure, personal data has become a key input for economic activity, but its monetary value is rarely captured by the countries or communities from which it originates. This raises serious questions in a data-driven world. For example, can taxation be used as a tool to rebalance these asymmetries? Possibly. But if so, it must be done in a way that is aligned with human rights standards and respects the agency of individuals. We cannot replace one form of exploitation with another one. Any framework that seeks to monetize personal data must ensure that the rights of data subjects are not subordinated to economic interests. At the same time, we must ask, who has the power to decide which data is valuable and on what terms? Who defines the rules of the data economy? These questions are not only legal, They are political, and they must be answered with a view to inclusion, fairness, and regional empowerment. We must move beyond fragmented regulation and towards a regional model of adequacy and cooperation, as proposed in our book. Our book analyzes different regulations of data transfers in LATAM, Mexico, Colombia, Argentina, Brazil, and Uruguay, respectively by Jonathan Mendoza, Nelson Remolina, here present Pablo Palazzi, Luca Belli, and me. And it concludes with a proposal for the harmonization of regulations. This is not only a technical necessity. The harmonization is a democratic imperative. So to sum up, I want to return to the core idea that has guided my mandate as UN Special Rapporteur on the right to privacy, and it is that privacy is not simply a matter of compliance. It is a matter of human dignity. We live in a time where personal data is at the heart of nearly every aspect of our lives, our health, our relationships, our mobility, education, and our political participation. Governing this data responsibly is not just a technical challenge, it is a moral and democratic obligation. The data economy, if left unchecked, risks reproducing and amplifying the inequalities of the past. But if governed with a human rights compass, it can become a powerful tool for inclusion, accountability, and social transformation. This requires us to reject false choices. We must not accept the idea that economic growth must come at the expense of fundamental rights. Nor should we believe that technological innovation is incompatible with ethical governance. It is not possible but necessary to pursue a digital future that is both innovative and just. Latin America has a vital role to play in shaping this future. Our region brings not only a wealth of legal expertise and institutional experience, but also a strong tradition of human rights, solidarity, and democratic resilience. We have the capacity and the responsibility to develop our own vision of data governance, our histories, one that reflects our values and our hopes. But we cannot do this alone. The way forward must be co-created through sustained dialogue among governments, regulators, academics, civil society, the private sector, and the people whose data is at stake. So I want to make a call to action, a call to place dignity at the center of the digital policy, a call to build bridges, legal, institutional, and human, across our region, a call to shape a Latin American model of data governance that is inclusive, effective, and proudly our own. Thank you very much.
Thank you very much, Anna, for an excellent introduction, really sharp, on point, highlighting both the complexity of the tasks, but also the fact that we can, and to some extent, we need to develop some solution. And we already have an embryonic, let's say, version of these solutions in our national framework, but we need to somehow harmonize them and make them more effective. And also the fact that they are so dispersed and fragmented reduces, to some extent, the bargaining power of the region in terms of then advocating for a more just redistribution of the wealth that is extracted by data. And to do this also in a way that respects humans. And again, and a point that I think we should all stress, that for governments it's impossible to implement human rights policies if there is no money that pays for them. And so the fact of having also an equal redistribution of the enormous wealth that data generate is essential, is instrumental for the fiscal sovereignty of the various countries where those data are hoovered. I'm preparing the field for the solutions. I'm sure that Carolina will bring us from the work of the BRICS, and maybe, who knows, also some inspirational thought for Mercosur meeting at the end of the year.
Thank you, Luca, again for giving me the opportunity to be here and also to share some comments and some concerns as well with you from the perspective of for the Foreign Service. And I want to just pick up on what Anna was saying about who decides the value of the data economy. And I wanted to add an extra layer of complexity, since we are dealing with a complex issue here, is that where should we go to negotiate this in the international level? This is a question that I've asked for many colleagues in different international organizations when I was, wanted to say, where should we start this conversation among states and non-state members about data economy. And obviously taxation is one of the issues that deals with data economy and reducing asymmetries and all of this. And I never got a straight answer. So some of them will point out to the UN, of course, but then you go to the whole umbrella of the UN, the different agencies. So who has the mandate, the correct mandate? And if the difficulty is to find the proper local to have this conversation, these negotiations, because this will have a concrete impact on the results that we eventually will be able to reach. So this is just to add a layer of complexity. So when we're talking about data and tax data or tax the data economy or tax digital economy, or if you only evaluate digital economy per se rules and all of this, there is a lack of negotiating tracks within the economic international organizations. It is very clear that you can have negotiations on the security aspects of digital economy. You have negotiations on privacy and personal protection, but you don't have any negotiating track on data economy itself, development policies for data economy and all of this. And this is what Brazil is actually the Brazilian government is trying to push forward in different international fora. So what we did in BRICS, and I talked a little bit yesterday about it, but I think I have the opportunity to go a little bit further, is to start a conversation. So the BRICS understanding on data, governance of data economy, it is actually a roadmap, should be read as a roadmap for future engagements. And when we were drafting the zero draft, let's call it, of the document, and after the first meeting, the negotiating meeting, there was, apart from a general agreement that the issue was a very high priority issue and should be taken forward, there was a second, almost the second step is, what are we talking about? So what are the concepts that we are talking about? How do we measure data flows? There is no consensus about measuring data flows. There's no consensus among National Statistics Office about data. What is data? So this is a major difficulty. So one of the 10 objectives that the document has, and I wanted to highlight this here, is to put National Statistical Offices in touch and in coordination so they can development or at least debate possible common methodologies for capturing the value of data. The second objective that I think is very important here for this conversation, it's about improving measurements of data flows or even agreeing what's a data flow. So one of the also second objective is to develop a common taxonomy for data and also explore indicators for the data economy. So we are starting the very basic, so sharing different understandings and different challenges that each country, each regulatory system has when faced with the task of regulating and the digital economy in general, but specifically when we are talking, if you want to have tools to address the asymmetries, and taxation is one of them. And finally, just a final comment, this is just to put it into context, you have different fora that actually are trying to tackle the issue of the digital economy and taxation. We have, I think, the biannually discussions at the WTO on the moratorium on customs duties for electronic transmissions, which will be again looked over in 2026 at the next ministerial conference. There was 2 years ago in Abu Dhabi was already a very complex issue. It was the last issue to close before the conference itself. So it was at the very last minute. There is no agreement among countries at this moment, but this will be renewed or not. So let's wait. It has been renewed for the last 25 years, but there's no assurance that we will be the next year. The OECD has also the base benefit, the BEPS project, which was it's a more than 10 years initiative that reached a consensus recently, especially in Pillar 2 with the 15% taxation of multinationals, which is another issue, but the discussions are still underway in that forum. And finally, the most recent forum is the UN Framework Convention on Tax, which has one of its protocols dedicated to the tax of taxing services, where the whole debate on digital service will probably be tackled somehow, or at least this is one of the objectives. Whether this will actually reach anything concrete is we still have to see it. And finally, just to cover something that Luca was saying at the beginning with the concern that the Kazan Declaration last year from BRICS, and also which was repeated this year at the BRICS Declaration regarding the redistribution of benefits of data. This is a concern that it's not only in BRICS. It was, if you look into the declarations from 2024, you can find almost the same paragraph at the G77 ministerial from 2024, and also the IPSA foreign ministers. So they have almost the same language, which actually gives you a very good clue that if you're talking about the global majority, and these groups are very representative of they are not the global majority itself, but they are very much representative of this feeling. There is a concern that looking into sharing the benefits of the digital economy, and especially of the data economy itself, it's one of the main concerns from different countries. And finally, a last word about Mercosur. I just wanted to highlight what President Lula said in Paraguay. Actually was 1 year ago during the Paraguayan presidency. He mentioned specifically the need for the Latin America or Mercosur to have its own data governance policy. So this is something that we are looking into within Itamaraty. Obviously, as you yourselves know much better than I do, it's a very complex issue, but it's on the radar. So I think it's something that, and we will very much keep reading all your work so we can get more inspiration. Thank you very much.
Fantastic. Thank you. Thank you very much, Carol. And really, it's very interesting to, I think you really are straight on point, highlighting the difficulty to find the right venue to have this discussion, which is the first enormous discussion. And secondly, also the difficulty to identify, to have a common understanding of what we want to tax and how. And this leads me to our next speaker, Beatrice, who actually can bring us a little bit of example of how this actually in practice, to some extent, already happens. And how we can already maybe take inspiration from some situations where the value of data is actually metered and assessed. Okay, fantastic PowerPoint presentation.
I don't know if they put it here, but it was on the. So.
Can we have Bete's presentation on the screen.
While they are working on it, first of all, it's an honor to be here at this panel. I know you were all hoping to hear from Marcelo, but he had a medical emergency, so I'm taking in his step today. And I hope to be able to convey at least 1/3 of what he had planned for this panel. Yesterday, I spoke in my academic persona, and today I speak as a partner at Marcelo Cristiano. I'm really glad that we were able to sponsor this prestigious event, and also to be on this panel with a lot of great and qualified professionals on such topic. So I take this opportunity to thank you all and thank Luca for agreeing to participate and moderate this panel. I think we're ready. So without further ado, I'd like to start my speech by stating that data taxation aims to be a measure of digital sovereignty as well. And to create a framework in this matter, we need to look at the practice, as Luca said in the beginning of my presentation. So in order to talk about it, we need to talk a little bit about the legal nature of personal data. There is an academic debate on the legal nature of personal data. So we need to define the legal nature in order to define what type of taxes here in Brazil are going to be applicable to the matter. So for some people, and I'm with this line of academic approach, personal data is an extension of the human person, and therefore it cannot be identified as a good or a product. But for others, personal data should be classified as an intangible asset along the lines of digital assets. However, regardless of the doctrinal path to be followed by the legislator in the future, personal data certainly has an economic aspect, an economic value. And it is on these characteristics that the construction of data taxation has been built. Note that even if personal data is classified as I think it should be, as an extension of human person, we can make use of all the legal construction made for the right of image, for example, which can be commercialized depending on certain guidelines. Therefore, if it's not possible to transfer the personal data itself, however, it's possible to transfer personal data in its material or economic aspect, be it being free of charge or for a fee. So under the terms of the construction around Article 11 of the Brazilian Civil Code, we have the legal permission for it to be commercialized. Okay. Carolina mentioned the initiative of BRICS that they put on their agenda to come personal data as a commodity, enabled to generate wealth and induce development of the members of the nations that integrate the BRICS. So while there is no definition, since the law is always lagging when we are talking about new technologies, we already have a massive commercialization of data. And we need to talk about it in order to identify the best scenario that our legislator can work on it. So for this economic aspect of personal data and considering the database economy, we can see personal data as an asset, and every asset has an economic value for a company that can be marketed. That's why I outlined 3 examples that we are seeing in legal practice, where we can create a path to taxation. My aim here is not to talk specifically about each tax that could be applied in each example, because I want to hear from other colleagues of this panel, but my role is only to set the premises and give you guys what we are facing here in Brazil. The first example that I bring to the table is special situations where we face like corporate reorganizations, M&As, and even bankruptcy. And for that matter, I brought the example of 23andMe, where the company bankruptcy led to the possibility of selling the genetic databases collected during the company business activity. You see many companies use this type of corporate reorganizations to transfer assets to third parties. So we are seeing spin-offs that transfer assets to a new company, followed by an indirect transfer of control, or companies that end up buying others precisely because of their assets, and that asset being our personal data. So we have already various maneuvers on the legal practice to transfer this database. We also have the possibility to direct sale of data as an asset to a third party, as in the case of the of WorldCoin project, in which people had their irises scanned and received crypto assets in return. So here the transfer of data without any obligation to do anything such as processing or customization may not be classified as good as goods taxables under our tax on circulation of goods and services, our ICMS, nor as services taxable under our tax on service, being our ESS. Thus, we have a gap as a result of the rigidity and obsolescence of the applicable constitutional concepts around the taxation. So for this reason, there is a debate about the difficulty of applying concepts such as intangible assets or manifestation of wealth in this type of transaction, especially if we are talking about non-onerous situations. So in these two first scenarios that I presented, we don't have a provision of a service, and therefore we cannot tax the service. But we have an operation on top of a company asset that has value, so we can create a path to taxation within these fine lines. And the third scenario that I bring to attention is the international data transfers resulting from partnerships, joint ventures, commercial agreements. And in this case, in addition to market rules, we need to take into account our LGPD and the Regulation 19 of 2024 of our Brazilian Data Authority. And for that matter, we need to talk about as well of international collection of personal data, that there is a difference between, in our legislation, between the collection and the transfer. When we are talking about the collection, the agent, the processing agent is located outside of Brazilian territory, and we were talking about transfer of data. The agent is here in Brazil, and he's collecting the data here and then transferring it to another country. And to our authority, when we are talking about the collection, we don't need to follow the Resolution 19. We only need to follow our LGPD. And I bring this in to your attention because the rules on regulation and Resolution 19 they are more strict than and have more guidelines to the community. One thing that the LGPD unfortunately does not have for this type of commercial transaction. So for these last two examples, we can clearly see a service because we are talking about the physical transfer of such value to another country, and therefore we can use our tax in order to create a public talk about digital sovereignty. So in order to conclude my presentation, we can and we must see these types of examples and these types of practice also in the light of the extra fiscal nature of tax, and with the aim to guarantee digital sovereignty and discourage while discouraging the international transfer of data. So with this brief consideration, it is certain that all this debate stems from the need to create strategies so that this data remains in Brazilian territory, or at least we are compensated for the burden that it is put in our population. Because as said by Anna and Carolina, we here at the Global South, we are the place where such companies collect this data and then they can like fulfill this economic value on their continent. That being said, the North, the global North. So thank you all, and I hope that.
Thank you very much for bringing these very concrete examples of how this already in practice happens in terms of also corporations selling large databases collected all around the world for, and again, not being the profit equally distributed in the place where this data have been collected. To get into even more concrete details, I'm pretty sure that Cecilia will have some useful food for thought for us. So please, Cecilia, the floor is yours.
Thank you, Luca. Thank you, all the previous speakers. I want to start by saying that Al Capone went to jail for tax avoidance, not for organized crime. So certainly data taxes on the largest appropriators of personal data will not solve all the problems that concern corporate power today, but it's a starting point. I would argue not only that these companies, as it was clearly illustrated before, these companies not only capture data globally and then turn that data into their assets from which they can then, of course, capture value from others, but they also capture science and technology. And on the basis of capturing data, science, and technology globally, then they are able to capture value also globally. So they are basically robbing us all. And then on that basis, they even get more and more profits. So if that's not enough reason to tax these companies, what could it be? And there, before entering into why taxing is needed but not enough, I want to emphasize one point. We are in Latin America. And as Latin Americans, we know that our dependence on primary products in part has led to significant problems of underdevelopment, but also this has led governments to, for different products, sometimes it's for mining, sometimes it's for crops, with different also percentages, but still this has led governments in Latin America to levy taxes on the exports of our primary products. And the underlying reason for doing this is that they are, when they export them, they are taking part of the richness of our soil. When companies appropriate data, be it that they store the data inside, let's say, Brazil, or that they take it to the US, because the data then is stored in basically data jails, where nobody can penetrate and see what's going on with that data internally. And these companies are ultimately the only ones that can capture value on the basis of this data. They're also appropriating part of the richness of our territory, our capacity to create and put that into bits. So I think that definitely there are reasons beyond corporate power to tax data and to tax in particular the largest data appropriators. This is because, as everyone probably in this room already knows, it's not the same to have, let's say, 10 data points, 100, or hundreds of billions. It's only when you are concentrating systematically more and more billions of data points, I may say, that actually value can be extracted from that. So there is also this need to discuss about thresholds. And speaking about asymmetries and concentration, I want to just make a point on why taxing data should only be seen as a starting point. Needed, but only a starting point. When I say that these companies are also appropriating knowledge in the form of scientific and technological knowledge, one of the things that one can look at is the network of organizations that are more frequently presenting their work at the most important AI conferences in the world. At the center of the network, already by 2018, 2020, we have Microsoft and Google. This means that these two companies not only present a lot of papers in these conferences, but also that they are the organizations with the largest capacity to influence the whole research agenda. And this is important because once everyone, the frontier of the discipline, and then all the rest, by emulating the frontier, end up designing models and thinking about AI solutions in this case, along the lines of what is useful for these companies can then go and appropriate the knowledge. As proxy of this, I usually compare, I don't know if the rectangles are correct, but it's okay. I usually compare the share of co-authorships with the share of co-ownership of patents. When we see, for instance, Microsoft's share of co-authorships between 2012 and 2021, almost 90% of Microsoft scientific publications, all the publications, not only those that were presented at the most important conferences in AI, almost 90%, so 9 out of 10 papers were done together with another organization. This means that also scientific knowledge is co-created. But then we go and see the patents, and only 1% of Microsoft patents during that same decade had a co-owner that was not from Microsoft. Of course, there will be papers that do not lead to patents. There will be patents that are not associated with papers. But I've also looked at the content of the publications and the patents. And here you have to believe me because I don't have a lot of time to show you this. They deal with the same thing. And they, of course, as you can expect, deal with AI, with neural networks, these days generative AI, and how to extract value from data. But this control beyond ownership is not only exercised at the level of data capture, personal data capture, because I will speak about other forms of data capture in 1 second, and also scientific knowledge, but it's also taking place in the open source sphere. And I bring this to the table because this is usually perceived as a space to battle against data capture and knowledge capture. There are many reasons why large tech companies these days not only use open source, but also contribute to open source, put pieces of their software in open source. And we can discuss a lot of things. One of the main reasons, of course, it has been to profit from developers' free work. But there are other reasons, and these include, in particular, the creation of de facto standards. Once TensorFlow, so once Google put TensorFlow in open source, this fast forward the transformation of TensorFlow into the standard of the industry. The TensorFlow is a machine learning library. Something similar is what Mark Zuckerberg is saying here when he justifies that he has put Llama in quote unquote open source, because it's not real open source what they've done. But anyway, he's very clear, and he's also very clear about the value of data in this quote. He says that what they are looking for is to build an ecosystem around Llama, and then they will extract value. And they are not concerned about other companies potentially copying the models because they have unique data. So they can also play the game of being perceived as companies that are contributing to open science, that are actually expanding the adoption and development of AI, when they are actually using that mechanism to further entrench themselves at the core of the digital economy and therefore global capitalism today. But this, as I was saying, is just a second reason. There is one more. Before jumping into that, let me just give you another example. GitHub. GitHub was acquired by Microsoft. GitHub is an open source development platform. And that development platform, the data, the code, was used for training Microsoft Copilot. So when we think of data, we also need to start thinking of all these different types of data used for AI models. And speaking of AI, I will go very briefly here before ending. These companies also use corporate venture capital and not only acquisitions to control beyond ownership. And when they do it, it's not a financial investment. It's mostly a way to get access to the intangibles of the other companies and to steer the development of what other companies are doing. The case of OpenAI with Microsoft is only one of the thousands of examples, as you can see on the table on the top. Google and Microsoft were ranking among the top 10 organizations in the number of AI startups that were receiving corporate venture capital money, or venture capital money in general, not only corporate, by February 2024. This is only for active AI startups. I can comment more on this, but let me say that sometimes even this money doesn't arrive in the form of a wire transfer, it's credit for the cloud. And this is really where we see everything coming together. The cloud is not only infrastructure as a service, and therefore it's not only the place where data is stored and processed. The cloud is the supermarket for digital technologies. It's through the cloud that Amazon, Microsoft, and Google, who concentrate 65% of the market, are capable of controlling how digital technologies are produced, exchanged, and consumed, because everything takes place inside the cloud. For competition authorities, this is really challenging, because basically it means that this is not just a market, this is everything. This is a full economy condensed inside the cloud, and at the same time, this full data, digital economy condensed in the cloud, then is impacting every single industry, because more and more, not only leading corporations and startups are becoming more dependent on the cloud and different digital technologies, but also states. So this is why when we think about solutions, I definitely think that there are differences among these companies. When we say taxing data, it's not that, I don't know, a small company will be taxed by concentrating the data of its business. We are really thinking in terms of the largest players in the global economy and how they relate also to what are still pretty large players, data appropriators that use the data that they appropriate to control others further below in the value chain, but that at the same time develop algorithms and process their data on Amazon, Microsoft, and Google Cloud, such as Mercado Libre. So my final point on this is that we definitely need to tax these companies. It will not solve issues like intangibles extractivism more broadly, or the fact that they ultimately are the ones who defined what's AI and what's not, and by AI being more and more used for every single field, they are also impacting in how we are doing research from the social sciences to biology and more. But there is another reason to tax this data extraction, and this is twin extractivism, because we are producing intangibles, data and knowledge that then contributes to concentrated power from companies from the two cores that we have today, ultimately the US and China. And this reinforces our need to get dollars from what we already know how to do. And this is the primary sector. So definitely, and now it's also becoming the space for the installation of data centers, which is not where these technologies are produced, but where these technologies find part of their production chain that is mostly energy, water, so more and more resources. So for all these reasons, I congratulate the initiative of taxing data.
Very good, good, provocative, but really also quite well researched ideas, a lot of ideas for us to digest. Also, let me stress that before giving the floor to my friend Gustavo Fossacci, we have, together with Professor Nicolo Zingales and our colleague Laila McKilsey, we have started an effort to try to consolidate this idea on data protection, data taxation, and data equity, to put forward, to just to depict a good picture of what we have And many of the points that you are mentioning here, actually, some of them were already included, some we are missing them, and this is a very good moment to actually try to consolidate this idea and try to put forward some recommendations. It's open on the CPDP LatAm website for comments, so if you want to download it, read it, send us comments in case we have said anything that is incorrect, or if we have missed something that could be useful, feel free to do so. And now, as my colleague Gustavo is also a judge at the Federal Council for Administrative Tax Appeals, I will give the last word to the judge. So please, Gustavo, the floor is yours.
Thank you, my friend Luca. I have also a presentation here. It's already there. Okay. Thank you, Luca, and thank you for the audience here. It's an honor to be here, but it's also at the same time really challenging to talk about this subject. There are a lot of issues here, and of course I brought a lot of data here, mainly provisions from the Brazilian reality, of course. And first of all, I also have some provocations here, starting from a simple question. What if someone comes with the brilliant idea to maybe propose to tax the air that we breathe, or to tax dogs, all the people that has a dog or more than one dog? I would say to tax the air that we breathe and to measure the value of the air that we breathe depends on a lot of circumstances and variables, I would say. Maybe to tax dogs, it's easier. The Germans have already a solution for taxing dogs. The Germans tax dogs for centuries. I don't know if you are acquainted with this idea to tax dogs, but I would say the good news here in Brazil is that we are really creative, and then in Brazil we can tax everything that we want, okay? We can amend our constitution and create new taxes, and we can also create by or through complementary laws other types of taxes and contributions, yeah? But regarding here the ongoing tax reform, I have some concerns here that my friend Luca has already told us, and also Professor Nicolas Ingares is also an author here for this contribution. Guys, it's just a discussion paper. We don't have any final conclusions, okay, on this paper yet, okay? But you can take a look here on this or through this link. And we brought some ideas. Of course, I would like to receive your comments on this paper. And but of course, we are talking about data, we are talking about numbers, we are talking about ideas for provisions, and starting from the OECD, why not? If you take a look here in this figure concerning the share of enterprises using, purchasing, and selling data. Of course, we are acquainted with the reality of selling advertising. Okay, that's already a reality, but when we talk about selling data, we can compare here on this side selling data or purchasing data, or here selling data using big data analytics, depending on the firm size or depending on the sector, the industry. You can take a look here. Information and communication sector work a lot with selling data, purchasing data. It's a huge volume of data. You can see here. And regarding now the money, of course, and we want to follow the money, we want to follow the revenues from sales of personal data and internet advertising. I would say the revenues from internet advertising are already framed and are already followed as well in Brazil. Is our reality here. We can tax advertising selling here in Brazil for a long time, for some decades. Of course, there was in the past a discussion if it was ICMS or ISS, a competence conflict in tax matter, but this competence conflict is already solved by or through our tax reform. But you can see here some cases from Alphabet, for example, Google and Facebook. Take a look here at Facebook. We are talking about 98% comparing revenues from 2020 and 2021, almost 100% regarding share of revenue from advertising, okay? But on the other side, we can compare this market share regarding internet advertising, comparing with other direct sales. For example, from mailing lists is also a reality, and also from databases, credit rating services. Of course, comparing with revenues from internet advertising, we have a huge gap between those amounts of revenue. Yeah, but regarding the Brazilian case, and here I would like to comment on some data or some provisions that we have been already discussing the last years, and I would say before our tax reform that took place in the last year, we have some ideas here, some proposals, of course. I call it bills aiming to tax data, indeed, but most of them calls it digital services, or the idea to tax digital services. This is not new, I would say, not new, but the idea to tax the data itself would be something new, okay? That would be something new. We have some bills here at the Chamber of Deputies, and one relevant bill, a complementary bill or proposal at the federal state level. Just some information here regarding, for example, the first bill, number 2358, when we are talking about, for example, the taxable event or the taxable nexus. In Portuguese, we would say fato gerador da obrigação tributária, the taxable event or the taxable nexus. That means we have to have some object, yeah, when it's possible, a tangible object or a tangible asset, a tangible nexus, yeah, to make this taxable event. But when we are working, for example, with revenue, that's I would say, the easiest way to define a taxable event or a taxable nexus, to work with revenue. Of course, you can work with income, you can work with profit, you can work with property, and you can work with transactions. As operações propriamente ditas, we call the transactions. And in the worst case scenario, if you cannot work with this taxable nexus, you can also work as the last alternative at all with the transmission, for example, with the transmission of data. Here is the first example, yeah, this idea to tax the transmission of data, and then from users located in Brazil. I don't have much time here to talk about taxpayer, but taxpayer is usually the idea to elect a legal entity, of course, and not natural persons. Once again, we are talking about global gross revenue in some billion or million amounts. We can escalate, of course, these rates in a progressive way. That would be nice. Regarding, for example, the so-called tax capacity or ability to pay, a capacidade contributiva from the taxpayer. This is a good idea to make some kind of tax justice, yeah, to escalate these rates. There are another bill here from 2021, also regarding the gross revenue here as taxable events, of course, on legal entities, once again. The idea to tax the activity mainly through the collection, distribution, or processing of user-related data. But there's something interesting here, and that is common in all these proposals, that none of them brings us or describes us any kind of accounting standards or accounting nexus. meaning they don't tell us how to do it. And that's the problem. I have told already Luca that maybe the solution here is to define and then globally what would be the accounting standards or the accounting criteria or proxies to value this data. And once the data is valued, then you can tax the data, of course. Also challenging would be when calculating the amount of revenue, for example, here, is to define or elect also as a proxy or criteria the number of accesses or the number of users, the number of subscribers, or the volume of data flow here. Of course, they may be considered. Of course, the European Commission in 2018 had already launched a directive here to tax all companies and enterprises that had, at that time, the so-called presença digital significativa, né? Significant digital presence in the European Union. There are some ideas regarding all these metrics, yeah, by valuing number of accesses, users, or also volume of data flow. This is not new, I would say. The transmission of data of users located in Brazil, of course, is also regarded here by this complementary bill, this proposal, 2018. The taxpayer in Brazil in all these proposals is always a legal entity, and then we are regarding all this revenue earned in Brazil. Once again, in this complementary bill, is the idea to tax also the transmission of data generated by users located in Brazil, but they don't tell us, they don't describe us how to do it, they don't bring us any kind of accounting standards to do that, unfortunately. And I have maybe 1 minute. When we talk about our tax reform, in a juridical perspective, yeah, I know. In a juridical perspective, in a legal perspective, I would say in Brazil regarding to consumption taxation. See, I'm not talking about receiving revenue. I'm not talking about accumulating revenue, the so-called property, but I'm talking about how to spend this revenue, the so-called consumption. When we are talking about consumption taxation, we are talking about our tax reform here from Complementary Law 2014 from 25. And then I would say, colleagues, all the transactions, so selling or supplying or all kinds of services are already covered in our tax reform in Brazil. Any and all kinds of goods involving movable or immovable property, tangible or intangible, and data is here by the intangible assets, of course, including the rights. So in a legal perspective, I would say by the consumption taxation, everything is covered here. Also, for example, the supply, or regarding supply, the establishment, transfer, assignment, concession, licensing, for example, or provisions of intangible assets, including rights. Everything is covered already in our tax reform. But we have to take a look here in the first part of the taxable event here, the taxable nexus. We are talking about transactions. We are not talking about accumulating data. We are not talking about generating data. We are not talking about transmitting data. We are talking about transactions that are carried out by companies, by empresários, as we say here in Brazil. Some curiosity here when we are talking about the consumption taxation regarding data that is completely irrelevant if that company or the other company obtains profit from the transaction, okay? This is also already covered by our tax reform. Something that I would say could be an obstacle for our ideas here, Professor Luca, my friend, yeah? is that when we take a look of the consumption taxation, only to the pillar of the consumption taxation, okay? Not receiving money, not, I would say, accumulating capital, but when we're talking about transactions, is that in our tax reform in Brazil, these two taxes, one is a tax, IBS, and the other is a contribution, CBS, okay? But they are levied at the same time and on the same taxable event, okay? Actually, they are not levied on the transfer of assets between establishments belonging to the same taxpayer. So, for example, regarding our tax reform in Brazil, for example, if some kind of establishment for Facebook, for example, even if it's not a permanent establishment in Brazil, but an advertising establishment here in São Paulo, transfer assets to Facebook in California, regarding our tax reform, these taxes would be not levied on these transfers because we are talking about transfers between establishments belonging to the same taxpayer. That could be an obstacle here when we are talking about consumption taxation here in Brazil. But as I said, and just getting to my conclusions here, is it possible to tax data? Of course. The Germans already tax dogs. Maybe we cannot tax the air that we breathe yet, but I'm sure we can tax data. The question is, how would we tax data? Yeah. And maybe the solution or the first step for the solution is to define then globally, some accounting standards to value this data. And once the data is valued, we can, of course, tax this data, okay? Thank you, Professor Luca.
Fantastic. Very good considerations. Again, I think there is a lot of very good ideas here already floating around. I'm pretty sure there will be comments or questions. As we started with 15 minutes of delay, we still have good 10, 15 minutes for comments or questions. So if you have any, you can raise your hand now, and we will have a mic expeditiously delivered to you. I see one question here, another question here, and another. So let's take these 3 questions because we have only 15 minutes. And so we have 1, 2, and 3. Yes, go ahead, please. I think it's switched off.
I have a question actually for this. Hi, yes. My name is Sarah, and I just have a question in regards to how do you value data? Like in terms of, and people always consent for data being, like all these social media platforms, it's inevitable for you to end up giving your data when you're consenting. How are you going to value it when it's already been consented to be given? And then I have another question for you, just because the mic will be going. I wanted to understand more about the cloud credit situation. Like how does that work in terms of data situation? And you maybe all of the panelists mentioned something about the data being taken from the global majority, and then the global north or minority end up profiting from it. What is kind of example that you mean by profiting from global north, global south data? I just wanted to understand that. And then, yeah, I think that's it for me. Hopefully.
I suggest we take the 3 questions, and while we pass the question, I will abuse of my position as a moderator also to explain a very important point of our rationale to combine in the position paper, in the discussion paper, the personal data protection and that taxation, which is precisely the fact that we are not using in this moment data taxation as a regulatory strategy to fulfill the goals that we establish as regulatory goals of data protection. So, for instance, your example I think is very good, because if you were obliged to state in your when you collect data and you collect the consent, we are collecting a highly valuable asset from you that will be used only for our economic interest, not for yours. And you might have, you will never be able to reap the benefit of this. I think that people will think twice after freely giving consent to collect an extremely valuable piece of asset, which is not necessarily communicated now, and that is one potential example. Another one is that the system we have now favors and incentivize data maximization. So collect all you can eat and hoover it to process it. It does not promote data minimization, which is what the law imposes us to promote as a principle. So by making it more expensive to collect all you can eat, you can fulfill what we already have as a principle in the law, which is completely disregarded by pretty much all large tech corporations. Sorry if I'm speaking too much, but that gives us the time to have the mic brought to the other gentleman there.
Thank you. So thanks to everyone on the panel. It's a very good session. I learned a lot today. So my question is on one of the points Cecilia has raised, but I think it's open to the whole panel. So you had mentioned that, taxation as a starting point, right? So my question is basically that, where do you see things going from there? Because it's not just about taxing the big companies, but it's about how you redistribute that across the ecosystem. And just an example to give a bit of context. So I'm currently based in the EU, and one of the initiatives there is the cloud and AI services development proposal, which is to sort of build a EU native cloud infrastructure. And while I think it's a great initiative, many concerns are that it's a bit of too little, too late. So my question is, where do you see things going from here, and what do you think the next steps are?
All right, we have a last question, and then we will have very brief replies. I'm sure our panelists will be able to deliver.
So thank you all for the excellent discussion. I'm here more to hear than to provoke. So I think there were very useful comments. But one thing that was mentioned is this aspect of taxonomies of personal data that, or of taxonomy of data that the BRICS plan to develop. And I got very excited when I saw this news that also Beatriz showed where the BRICS were going to impose tax on the use of data for AI training. When I read the article, it was actually more about the content that is generated rather than the personal data. And I mean, if you are thinking in the future of developing taxonomy, would this include differentiation between content and data and different types of personal data being recognized as having different types of value? Because, of course, very sensitive data might be considered in some way. Research data is something completely different. Data about the population or the infrastructure of the city is another type. So the taxation probably, and this brings it back to the point that was raised, like if we need to create some evaluation standards for the data, would depend on these categories. So I think it's a very challenging path. And I wonder if there's any further thoughts that the Brazilian Minister for Foreign Affairs can share on that, or if it's really just the beginning of the work right now.
As this last question was directed to the Brazilian foreign ministry, how lucky we are to have her with us. So I would suggest that as we are running out of time, each of you give some very final remarks trying to reply to the questions. And let's start with Carol, and then we will hand with the final word to the judge.
Thank you. Thanks for the question, for the comment, and for the question. First of all, I think it's something should be very clear. The BRICS didn't agree to tax anything, right? What we agreed to is to look into the issue. So there is a difference in there. So if I say that the BRICS had agreed in the tax, I will be probably fired. So let's not go there. So this is, as I said at the beginning, this is a roadmap. What we agreed in the understanding on data economy, it's a roadmap for future work areas, which might sound a little bit, okay, boring, not a roadmap, but there's no other roadmap, as I am aware, in the international sphere. So this is quite something. Regarding the use of data for AI, what I think it's in the BRICS, this is another document, is the BRICS statement on the governance of AI, which deals with copyrights and said that a balanced approach to copyrights in terms of training AI models. So this is something different. And finally, the whole concern related to sharing the benefits of the data economy. This is, as I said, a common concern, but there is no agreement yet on how to tackle that. So, and the whole process of the data economy, I understand, is exactly to give a more of a concrete answer to the demands of the leaders that said that, okay, we should think about sharing benefits more equally among all countries taking part in the digital economy. So I hope it covers what your question. Thank you.
So why a starting point? Because taxing gives you money. And if you have money, you can think about what you can do with that money. I totally think that the AI continent proposal from the EU is fully incomplete. It's incomplete not only because of the money that they are investing, which we can argue that is not enough. It's also because actually what they're investing is not invested in the right way. Why? Because if you only build physical infrastructure, then you're further contributing to the status quo in the following way. You give your companies the opportunity to train the models for free at a European establishment, but then those companies will be, in the end of the day, forced to sell the resulting product somewhere, and the market is the cloud that is controlled by Amazon, Microsoft, and Google. Cloud credits, to go to your question, are a way in which companies are locked into the cloud. They are not only used for AI startups. AI startups receive a lot of money in the form of cloud credits, but even any of us can open an account and we will see that we can use some cloud credits for specific services. This means that we can use them for free. In the case of AI startups, they have, like, let's say, an amount of money that they can use for whatever services they want. But once the money is gone, they need to start paying. And the problem is that this is not Netflix. It's not that, oh, okay, the free trial ended, I just cancel my subscription and continue my life. If you're an organization that has built all its architecture on the cloud, this means that its lines of code will be also connected to black boxes, to services that are purchased without really accessing the code on the cloud. And this means that the work, the money, the resources, the learnings that you've already invested will go wasted if you want to go away of that cloud. And let's say you migrate away of the cloud. Where are you going to go? To another of these companies' clouds that operate exactly in the same way. So definitely, I think that the more I study the cloud, and here I connect both questions, the more it becomes clear to me that a key choke point, a place where we need a public solution, a public-led solution, is the cloud, not simply as infrastructure as a service. Ultimately, we can even have private companies offering infrastructure as a service. Then I would argue that for the state, that's not a good choice, and the state should have its own data centers. But for other companies, we could even argue infrastructure as a service can be sold, but it needs to be sold on a market that is not controlled by a few companies. It needs to really be sold on a market that is publicly organized. And this is why we need a public-led solution for all the digital services to afterwards be able to be sold, shared, and reworked on and consumed on an already more leveled playing field. I say already more leveled because, of course, still there are a lot of knowledge asymmetries. And for these knowledge asymmetries, which particularly affect the global majorities, I think that more research, of course, is needed, more public science and technology, but we need to also build the institutions that enable us to prevent from being robbed again and again, because otherwise all the new knowledge, all the new science that is produced in Brazilian universities or Argentinian universities and whatsoever ends up fueling the system and appropriated by a few companies, as the research that I was showing before shows. Thank you.
No comments. Fantastic. So not because we don't have comments, but because we have saved a couple of minutes. So let's. No comments. Okay. So again, the final word to the judge. Let's deliver a decision. Let's make them pay. I loved the brief interjection by Gustavo that in Brazil we are creative and we basically can tax whatever we want. So we have a solution.
That's right, and that's right. Yeah, my friend Luca here is dreaming about taxing data. I think for a long time, my friend. Yeah, for a long time. But Yeah, indeed. Maybe this idea to control the data, Cecilia, in a public way, you said, or with public servers, yeah, as I understand that, but that may be a solution. But since we are, at least here in Brazil, a little bit far from this idea, yeah, to have or concentrate all the data in public servers, yeah, or something like that, I would say, for example, we already value here in Brazil brand marks, for example, from companies, from enterprises, okay? And when we value brand marks, for example, one of the starting points for this valuation from brand marks is the gross revenue, the amount of revenue this enterprise, this company earns, also through this brand mark. And why not do that with data? Till now, we have some pronunciation from our Federal Accounting Committee that says data is already established as an intangible asset. And since it's an intangible asset, it can be valued. The question is, which standards or which accounting standards we will elect or legally have to evaluate this data? It's a political discussion, of course. Of course, it's a political discussion, because before it comes to the Federal Accounting Council or Federation here in Brazil, we have to set some basis here in our legislation. So we are talking about a political decision at the end of the day if we are using the one or the other accounting standards to measure, to value this data. But it is possible, of course. But first of all, we have to describe all the types, all the species of data I was talking about before our conference here, about the case of YouTube. In YouTube, there are already some, for my view, some objective and really clear standards or practice to evaluate the revenue. For example, the number of visualizations is already a metric to have some revenue, of course. If you are a YouTuber and if you have starting from 1,000 visualization, then you escalate for 100 visualization, and next month you escalate for 1 million visualizations. The more visualizations you have, the more income or revenue you will receive, of course, from YouTube. First of all, YouTube will receive this revenue, and then YouTube will give you a share from this revenue. But the metrics are already there, at my view. Of course, these metrics are not public yet. Maybe we should put that in a proposal, in a bill, in a framework, a proposal for a framework, of course. But the metrics are already there. The criteria are already there. But of course, it depends on the kind of data. But I would say, Luca, my friend, you can sleep very well today, okay? Because the first answer you have, yeah, of course, we can tax data, of course. So you can have a good sleep today. But yeah, we have to discuss a little bit more about these standards, or if you would have some kind of public servers here in Brazil to control all this data and to establish on common grounds all the criteria to value this data. Okay.
It's excellent. Thank you very much, everyone, also for those who bravely resisted the temptation of lunch and stayed with us until now. Now you will all be rewarded with a free lunch on the house, and thank you very much for your participation.